Here, how do they calculate the approval amount? How do they calculate the approval amount?
Okay, so this is where you are working with a good loan officer or a not so good one, because the quantification of your income will help us to figure out how much you can qualify for. And so when I ask you, how much money do you make? Can you answer that question right now? And you'd be surprised at how many people have no idea how much money they make.
Right.
So we have to know how much money you make. We have to quantify it. And that's sometimes like bonuses, overtime, etc. that we have to, there are certain rules for averages. So once we have that quantification that we feel an underwriter is going to accept, then we can then figure out what your debt to income ratio is. And the rest of the debt to income ratio is just what are your debts? What are your minimum payments on your credit cards right now on this snapshot of your credit report? What's your car loan? What's your student loan minimum payment? Certain types of mortgage programs, we have to actually bump up your student loan payment if you're on a payment plan that's income based. So there's weird things that we have to do, and then we figure out what your mortgage payment can be. And then once we have that number of what your mortgage payment can be, we have to guess on what the real estate taxes are going to be, what the homeowner's insurance is going to look like, things that we don't know for sure. So we have to give you a ballpark. And that's why it's funny when I look at some of these pre-approval letters and it says, you're pre-approved for $123,649. It's like, if the interest rates go up 1/8% tomorrow, that number is going to change. Yeah. So we try to, our institution tries to give you something that we're very confident you're going to be able to purchase. But if you find one that's a little higher, call us. We'll run the numbers. We can find out, for you specifically on that house and then get you up and running.
Awesome.
So.